Welcome back, our dear viewers. And of course, at these days, more and more young people are getting into trading. Some see it as an exciting opportunity to make a quick profit, while others view it as a serious path toward financial freedom. But with the fast-moving markets and endless online advices, how can the beginner trade wisely and avoid the common mistakes? So, of course, today we'll talk about with the world of trading, its risk, rewards, and what every new trader should know before starting. So with that, let's welcome with us our analyst, Mubarak Aldelaimi. So, Mubarak, thank you for being with us at the show.
Thank you. It's an honor to be here, actually. And today we are going to discuss more about the questions, and we expected more questions from young people nowadays.
Exactly. So I want to ask you, why do you think that young people are turning, more and more of them turning into the world of trading these days? Is it because of like the fast-pacing world and it growing so fast, or do you think that it becoming so easier?
You know, nowadays young people, they think like they want to make big profits in a very small amount of time. To me, this is much more like a gambling way of gaining money. You know, trading is a very long trip. Maybe it can last with you 5, 10, 20 years. I saw traders like 30 years of working. And the thing is, it's not about getting profit like one shot in one day. It's a very long process. And you will go through, psychological issues, you will go through financial issues, and you need to manage risk. You need to do many things to have a very nice trip.
What do you think about the difference between the trading, since you talked about the people who have been trading for like years and years? So what do you think the difference between the trading, the long-term investing, and the trading, like the spot trading that we're seeing, like the online ones?
Actually, you know, investing, using trading as an investing for a long period of time, it's much more easier and it's less stressful than intraday trading, because intraday trading carries a lot of risk, and you need to manage your psychology. You need to train your psychology to have a very very stable emotions.
Yes.
Because you know the volatility of the market, and maybe you will be afraid, you will be greedy, you will be these psychological issues. Everyone has to manage it, and
controlling emotions, as you might mention.
Exactly. You need to have like self-discipline, otherwise you will lose your money.
Because of the feelings and how you might feel, you might end up afraid, and then you might have a quick sell without closing the deal correctly, and then you might lose more and more money. So as you mentioned, this big mistake that people might do. So for the beginners, what do you think they are the first steps that they should do before they step into the world of trading?
To me, I can make them easy, like 3 or 4 steps. Step number 1, you need to study. You need to study how to read the market, how to read the market structure. We have something called market structure. You need to know what is the market structure. You need to know on a very very long period of times, is the asset that I'm trading, is it going in an uptrend or downtrend? So you need to understand this. This is number 1. You need to study. You need to know how to look at the market. There are many ways. There are many, strategies, many sites or interpretation for the market. You need to pick one and study it for a period not less than 6 months to me, or let's say 1 year.
Straight 1 year studying, yes.
Okay. After that, while you are studying, you can do something we call it back testing. If you want to use a strategy, for example, you need to back test this strategy in the past. Then you can get the statistics of that strategy. After that, you can decide if you can put your money within that strategy or you don't. This is number one. You study, you do your back test. After that, you do your forward test. I mean, you can open a demo account, for example, and you can use that strategy for the coming week or the next week, or I mean, for the coming year.
Maybe I could put only a small amount of money.
You can.
Like few KDs to test this theory.
You can. But usually we say, I mean, instead of losing
even a small amount.
Yeah, even small amount of money, you don't have to. So you can test your strategy in the past, then you can test it in the future. We call it forward test. After that, if you see a very nice numbers, statistically speaking, then you can put your money in that strategy and you can work easily. And by the way, each asset has a different way of backtesting. I mean, if you backtest your strategy, let's say on euro dollar or euro versus dollar, it's I mean, it will not be working on gold, for example.
Exactly.
Yeah, each asset has a different way of, I mean, volatility, different, we say, price action.
Might be different strategies.
Yeah, the market behavior will be different from asset to an asset.
So if I wanted to ask you, since you mentioned about the education in a way, how important do you think that the trading education should be? How important it is exactly? And mostly, do you think that we should start before we go into the trading world, or you think that we should start first on the trading and then we start our education?
You know, anyone, I mean, I met many traders in my life. Everyone told me that he started trading, then he tried to like make things right and trying to correct his mistakes. That will take longer time and that will cost a lot. So to me, instead of losing a very big amount of money, start learning at the very beginning, then you can go trading as you like in any strategy you want, on any asset you like.
So Mubarak, if I wanted to ask you about the most common mistakes, since you mentioned that this is actually a common mistake a lot of people used to do, and I'm not going to lie, I almost fell into one of these, to start the trading and then to go and education yourself. We need to do the opposite thing. So what else are the common mistakes that mostly beginners do when they goes into trading?
We have basically 3 common mistakes worldwide. Okay, number one, or mistake number one, is that some people, they have what we call, I mean, there is a terminology in trading, we call it FOMO. Okay, the long form is fear of missing out. That's all true. So like you feel afraid that the market will go and leave you, and you try to like you want to catch up. That's a very wrong way to trade. You have your point of interests, or we call them in our school, okay, in ICT, we call it PD arrays. You wait for the price to come to your area. After that, you will wait for a confirmation. Then you can execute your trade. You have a very clear stop loss and very clear target. Okay, so the first common mistake is FOMO, fear of missing out. You try to catch up. This is a very wrong way to trade. Mistake number one, sometimes people close the trade early, okay, or enter very late.
Enter very late.
Yeah, so you need to have what we call flawless execution. Your execution should be clear and on the right time.
But not always it can be like perfect.
Not always. I mean, there is a plus minus, let's say, but to me, you have, when your confirmation occurs, okay, maybe you will have a very small margin to, I mean, to execute.
To execute,
yeah.
To either go into the
yeah, exactly.
point or get out.
Yeah.
Yes.
But if the market, I mean, goes in
a huge amount, you cannot go into it because it will be so late.
Yeah, so you'll wait for another chance.
So if I wanted to ask you about, it can be called as a risk management. Can you explain this concept more for us?
Yeah. Before we go to the risk management, I will tell you about the last mistake that people do. The last mistake is they lose focus, okay, and they try to trade 24 hours. This is a very big mistake. You need to have like 1 hour or 2 hours a day. If you are an intraday trading, you need to pick 1 hour or 2 hours, like New York opening market time, 4:30 p.m. Kuwait time, or like London session at 10 a.m. Kuwait time.
Yes.
You pick just 1 hour or 2 hours. That's it. One good trade a day. That's enough.
That's actually an amazing way to explain it, and picking that time is really important alongside the strategies that you give us. So about the risk management, can you explain more to us?
To me, the whole game is in the risk management. Even if your entries are wrong, even if your analysis is wrong, even if everything is wrong, you know, the only thing that will save your wallet or will save your capital is your risk management. Usually we say you risk 1% per trade. Some people, we call them conservative traders. They risk 0.5% per trade from their capital. Young people nowadays, they try to risk like 5 or 10% from their capital. It's suicide, you know. You cannot.
It's more risky.
No, you cannot trade this way. You risk 10% per trade. It means if you were wrong in 10 trades,
you will lose all of your money.
You will lose your capital. That's a very wrong way to trade. The correct way is you risk only 1% or 0.5%. Maximum, to me, you risk 2%. And there are, you know, for entries, for having a trade, you know, we have we call it C setup, B setup, and A setup.
And of course, unfortunately, we reached out of time, Mubarak, but thank you so much for being here with us.
Thank you.
And enlighten us more and more about trading.
Thank you. I appreciate it, and thanks everyone. And it's an honor to be here.
You're welcome, and of course for your viewers. Now we're going to go on a break after this lovely interview, and then we'll be back, so stay tuned.